So welcome back once again to another lecture, the lecture number 2. So we had to discontinue the previous video. I was talking about this risk management. So this video we will continue the session from where we left. Okay, so I gave you two examples of like success rate with 60%. We got net 80% of profit, $80 of profit. And with the success rate of 50%, we got net of $50. So we're gonna try another strategy that, let's say, does 40%. Let's try it on 40%. So we have net 0, it's unknown. We make it 40%. Now this is pure mathematics, it's not hypothetical, it is applicable. You can try to apply it anytime. Okay, so I'm gonna go and make this trade in loss. I wanna make this one in negative $10. I wanna make it red. God praise if I do it wrong. So we make total loss is equal to 30 and 60. We have total loss of $60. And our profit is 1, 2, 3, 4. Our profit is 80. It's $80. So total profit is equal to $80. What is our net profit? So net profit is 80 minus 60, it's $20. So we got $20 of profit. So now you see that how much powerful is this thing, this risk management, if you are doing it the right way. You can see that a person A is a bad trader. He is really a really bad trader because he has a success rate of 40%. Now I'm gonna talk about another person. His name is person B. He is a real greedy person and he is a common man, just like most of us are in the beginning. Now this is the person B. I want to make him something different, like this guy is orange guy. He has the same funds as the person A, who is a bad trader. This one is a bad trader. This one seems to be a good trader. He says he's the best trader. He does not use any kind of this thing. He gets good traders as well, he gets bad traders as well, but he is avoiding the risk management. Now let's suppose this person does not use any kind of risk management and he is taking a trade. He takes a trade. Trade 1, no risk reward. He puts everything in. He puts all of that in. So for example, he put $1,000 and let's hypothetically say he made $1,200, like $200 profit. So his total would be $1,200. Now he made $200 profit. Trade 1 is equal to $200. I'm just trying to explain you something. Just try to understand it my way. So he did a trade 1, made $200. He did trade 2, did a trade 3, did 4 trades. Market was on his side. He was making everything, like he was putting everything in. He made 300 in this time. Let's say he made, no matter how much he makes, no matter, these profits, see, they seem bigger than this one. This guy making $20 from a trade, his profits are immense. So he did like 4 trades. Let me just do it real quick. So he did 4 trades. He was not using risk management. He was closing at his psychology, his emotions. Now with this person, he is at the mercy of the market. This person has left himself completely vulnerable to a market, because you know what he's trying to do is something like that. I'm gonna try to represent it. This is the same sport, same resistance. Now what this person does is that he's emotional. He thinks of himself a good trader, but he's absolutely bullshit. So he doesn't know this thing, but he's not even using stop loss, let's say, or even let's say he is using stop loss, but he is emotion driven. So I'm gonna take the price action. The price is like this one. The price comes here, it comes here, he gets FOMO, it comes here. Now he's starting to worry that his stop loss might get hit. So what he will do is that he reverses his stop. He tries to move his stop loss. But the market does not care. He does not care how much he moves the stop loss. It comes near his stop loss. Now he is afraid. He is scared to hell to lose this money that he made out of flukes, complete flukes. No ideas, just getting signals from some random groups, joining some random communities and getting signals and asking for signals. Please signal, please signal. They give them signal, but he does not know the risk management. Now what he does is that he moves the stop loss again, and you have seen that multiple times. Huge flash crashes, the market is going down, and he is continuously adding all of the money to not get liquidated from this trade. He's continuously begging for money. He's getting loans from his friends. He is taking money from people just to save his stop loss. Now at this position, he is trapped. He is in a debt trap, very debt trap. He is having a P&L of, let's say, minus $4,000. $4,000 negative P&L in futures. Now he cannot close the trade because he is afraid. But he is trying to fight the market. You don't fight the market. This market, it does not care about you. You do not fight this market. But he is continuously trying to fight the market, and he cannot afford this loss because he has earned this money so hardly in such a way, like with flukes. He puts all of the $1,000, it goes up, he makes $200. This guy, he puts only 1%, he makes 20%, $20. Just $20. Even if he trades for like whole month, this guy will not make $200, but this guy will get better if he improves his success rate and he improves his 1:3 and 1:2. He changes the ratios and try to experiment on that. So he will be a better trader. But this guy, he will continue to be a loser because he has no developed strategy. Even if he had a developed strategy, he would be on the mercy of that strategy. If that strategy fails, like for example, if he did that same 10 trades and he lost let's say he lost 60% and he had a success rate of 40% and 60%. Right now here you can see he had a success rate of almost 90%. He took 5 trades, let's say. Trade 5 cost him everything. Let's say 500, 650, 1650 was his total earned money. So, and he has a success rate of 90%. He made 4 trades. Okay, and let's just ignore this. Just try to understand what I'm saying. So he has a success rate of 90%. This is hypothetical. Nobody has that much unless he's doing trading for like 3 or 4 years. You don't get every day. You don't get 90%. It varies, 70%, 60%, 80%, like that. So he's having 90% success rate without strategy. Even if he's that good, he is already at the mercy of the market. His trade 5, he was putting everything at the same time. His trade 5 made him lost all the 90% and his initial capital. So at this place, he's the mercy of the market. He will try to Fomo back in. He will not do something like that. The market will disturb him psychologically. He will stay at the nights and not be making anything and getting loans just to save his position so that he can save this. And you see that, for example, this was $69,000 for Bitcoin. This could be, let's say, $40,000. You can see right now Bitcoin is at around $30,000. So this guy, he lost everything. He lost all the hopes. But that guy is still in the profits. So this is what I wanted you guys to learn about the risk management. I hope I tried my best to make myself clear about this thing and you have learned it well. If you still do not learn it well, please make sure you send me a message and talk about that in the community as well. And maybe in my next course I will try to cover the 1:3 as well, and you can try to do this math as well depending upon your portfolio. For example, this was just a random example of $1,000. If you have $10,000, you will have all of these results completely different. So you can try to do this math, but do not forget that this, no matter what place you are going to open a trade, you have to do with this 1:2 for at least a year. Think of this as something as an exercise, something as a military exercise that you have to go through that. You have to control your emotions no matter what. You will get this is the minimum requirement of your success rate. You don't need 8 trades to be successful. You need only 40% success rate. That means you can lose 6 trades. 6 trades, you just need 4 of them to be profitable. Even if you lose 7 trades, you will be at the break even. I can try to do that math as well. So even if you lose the 7 trades, you just get to the break even. You do not lose anything. You can do the math. You just need 3 trades to be at the break even, and you need 4 trades to be a successful trader to make profit $20 depending on 1,000 portfolio. Now imagine having $5,000, $10,000 portfolio. You can multiply that. So this is the power of risk management. I want every one of you to learn it again and push emotion aside. So in the next lecture, that will be the last lecture, I will give you some strategies of scalping. I'll do some thing on a trading view as well. I'll teach you. We will use this 1:2 to show you some trade setups where you can do some quick scalping and make some, let's say, quick bucks. So thank you so much for watching the video till the very end. If you like the video, please make sure you subscribe the channel. See you in the next video.